Hi, I'm Debbie from Property Apprentice, and today's podcast is about should KiwiSaver be made compulsory or leave things as they are? You might have heard the recent chatter in the media about potential changes to KiwiSaver, with proposals floating around, most notably from New Zealand First, suggesting that KiwiSaver could become compulsory. It's a topic that it should have every Kiwi ear pricked up. Currently, KiwiSaver is voluntary. You can opt out if you start a new job, and you can take a savings suspension if money gets tight. But the new conversation is about whether or not we should follow Australia's lead and make saving for retirement mandatory for every worker. At Property Apprentice, we believe in looking at the numbers without the hype. So let's break down what a compulsory scheme would mean for your wallet, your property-related goals, and your retirement years. So the case for compulsion, compulsory KiwiSaver, in other words, let's look at the pros. Supporters of a compulsory scheme argue that we're just not saving enough. Closing the savings gap, research suggests that a significant portion of New Zealanders are heading towards a retirement where New Zealand super alone won't be enough to live comfortably. Compulsory contributions would ensure everyone builds a nest egg. And, with our aging population, I think this is something that's really worth considering. Free money. If you aren't in KiwiSaver, you're potentially missing out on 3% employer contributions, as well as the government tax credits. Compulsion ensures every employee gets this, essentially a pay rise into their future fund. National economic strength. A larger pool of domestic savings, currently over $100 billion, can invest back into New Zealand businesses and infrastructure, potentially strengthening the economy we all rely on. So let's have a look at the case against compulsory KiwiSaver, or call it the cons. However, making it mandatory, look, it's just not a silver bullet. There are some valid concerns. First of all, reduced take-home pay. In a cost of living crisis, losing 3 to 4% or more as the minimum contribution increases over time, losing that amount per week could be painful, especially for low-income earners. That cash could be needed for groceries right now, not for retirement later. Business costs. Employers would face higher wage bills if they're forced to contribute for every single staff member without exception. This could flow through to higher prices for goods and services. At the moment, businesses have got the option of taking your employer KiwiSaver contribution out of your salary. My personal opinion is that's a bit stink. So, I think employers should absolutely look at putting that KiwiSaver contribution from them as an added bonus to someone's salary, which is meant for their retirement or helping them build a house deposit. But there are some employers who include it as part of the salary package. So just make sure you check that out. Otherwise, your actual contribution to KiwiSaver from the 1st of April this year is going to increase to 3.5% for employees and another 3.5% for employers. So if your salary package includes the employer contribution, your KiwiSaver your KiwiSaver contributions are basically going to increase to 7% as of the 1st of April this year. Lack of flexibility. Look, one of the current benefits of KiwiSaver is the ability to pause your contributions if you find yourself in situations of financial hardship. A strictly compulsory system might remove this safety valve, although I doubt that they would do that, but yeah, it's potentially possible. Locking money away when people feel that they really need it the most. So let's have a look at the hidden benefit for aspiring property investors. You might be thinking, look, I want to invest in property, so why should I care about my KiwiSaver balance? The reality is that for most Kiwis, KiwiSaver is the gateway to getting on the property ladder. And it's essentially compulsory savings, which diversifies away from property as well. Buying your first home is often the first step towards building a rental property portfolio. Your KiwiSaver balance, including the returns and the employer contributions, can be withdrawn for everything except for $1,000. You've got to leave $1,000 in your KiwiSaver fund. And as long as you've been contributing for over 3 years, you can withdraw everything except for that $1,000 to form a good chunk of your first home deposit. There are a few other rules around it. So, things like you can't already own any other property, and you can't have ever used your first time withdrawal before. But, the rules are pretty easy to find. If you just Google first time withdrawal for KiwiSaver, it'll tell you all the steps about it on the claim or a website. If KiwiSaver was compulsory, first-time buyers would likely reach the market with bigger deposits because they've basically been forced to save methodically from day one. Better lending terms, a larger deposit means a lower loan-to-value ratio, or LVR. So that often unlocks better interest rates and potential cashback offers from banks as well. So with a majority of lending for first-time buyers at the moment, well, not majority potentially, but certainly a good chunk of it is getting done to first-home buyers at 90% lending, but anything above 80% does tend to be a little bit more expensive because banks can add lenders' mortgage insurance or low equity margins and things like that onto it as well. The exception to that would be first home buyers who are buying new builds. Those are excluded from the deposit restrictions. So they might not find that they've got the same restrictions for that, but certainly above 90% can get more expensive. The discipline of regular KiwiSaver contributions helps build momentum, and it trains you to live on slightly less than you earn. And that can be a crucial habit for any successful investor managing mortgage top-ups in particular. So, my thoughts on this are whether KiwiSaver becomes compulsory or not, the principles of financial access remain the same. You can't rely solely on the government, whether that's New Zealand Super or a compulsory savings scheme to secure your financial freedom. While KiwiSaver is a fantastic tool for diversification and that first crucial house deposit, it should be just one part of a wider plan. If you're waiting for legislation to force you to save, you're already on the back foot. The most successful investors that we work with take control of their cash flow voluntarily, long before any government tells them that they have to. So what should you do? Whether the rules change or not, your focus should remain on your long-term strategy. If you're already a member of KiwiSaver, check your contribution rate and your fund type. Are they aligned with your time frame for buying a home or retiring? If you're looking to buy your first home or expand into investment properties, understanding how to leverage your existing assets, including KiwiSaver, is key to that. But look, don't wait for the rules to change to sort out your future. Come along to one of our free events if you're not already a client of Property Apprentice. You can register for one of our free events on our website, which is propertyapprentice.co.nz, and I'll teach you a bit more about investing in property and the world of finance around that as well. So feel free to register for one of those free events. Go to propertyapprentice.co.nz, and I'll look forward to seeing you soon. Thanks. Hey there. Want to stay on top of the latest property news and trends? Subscribe to the Property Apprentice podcast for weekly updates that will help you to navigate the market like a pro. We cover everything from insider tips to expert interviews, so you'll always be in the know. And don't forget to ring the bell and hit that subscribe button here on our YouTube channel for even more helpful content to boost your property journey. Check out the link in the description to subscribe to the podcast, and we'll see you in the next episode. Happy investing.